Welcome to Crowded Market Report by Jason Shapiro.
Hello, today is Saturday, January 6th, 2024. Happy New Year. I'm going to do my first episode of what I'm calling my new podcast, which is going to be called Don't Trade, Fade. I don't have a podcast set up yet, so I'll just do it as one of my regular YouTube videos. I don't really know what the difference between a regular YouTube video and a podcast is, but one of these days we're going to set up a podcast. It's going to be called Don't Trade, Fade, and we're going to go through a bunch of different things that I find to be possibly good fades, and that will help us keep the record of it, and we'll be able to track how these fades do, and it will be a good record. But since I don't have a podcast set up yet, I wanted to start this whole thing today because this I thought was very interesting. It came out last night, Friday night. I'm going to play this video, and I'll let you listen, and I'll be back to give me my thoughts.
Dan, how many times did you try to short NVIDIA?
A couple times, and a couple times it worked last year. Let's be very clear. When this stock gapped up to $400, it spent the last 6 months of the year, the second half of the year, trading between 400 and 500. Okay, so there's plenty of money to be made on this, and I got to be clear, I wasn't poo-pooing what the products that they had and the services they had, just the enthusiasm around the stock. But here's a different scenario right now, and Carter Braxton Worth got me thinking about this yesterday because I asked him about this, and if you just look at the technical setup right here, the fact that it's been consolidating, it's underperformed the S&P 500 pretty massively and much of the NASDAQ over the last few months. Look at the RSI. The stock is actually corrected without correcting relative to the market here. And this looks kind of interesting to me because now it's butting up against those prior all-time highs after this long consolidation. It's outperforming this week. We just spent some time talking about how some of these mega caps are doing. And what I find really interesting is that, yes, it's grown into its valuation right now. But I don't want to own this thing. I think it sets up as a good trade using options. No. You're going to get your times. But it sets up as a very interesting trade. And I'll tell you why. 40% of their customers are going to report the last week of this month. They don't report until late February. So trade it into their earnings because I don't want to be there when I think they are going to show deceleration in their own results and their own guidance. So here, I was looking at the options, okay? Look at that. That's implied volatility. That's the price of options. It's very near a one-year low. That's telling me if I want to basically make a directional bet in this, I can define my risk at cheap prices. So I want to look out to February expiration. I want to look at the 500 call in February. It costs you $16. Stock trading around $490 right now. That's 3% of the stock price. It breaks even up 5%. This stock moves on average 3% a day or so, and I have more than a month for this to play out with all those earnings catalysts of its main clients, customers. So again, this is a trade. It's not an investment. I'm not doing about face on this. I do think in late February when they report, they're going to show deceleration relative to what consensus thinks, and I think that will be the top in the stock for a while.
You had a question, Mr.
I did have a question. I raised my hand because that's what we.
I'll say a few things about this. For those of you who don't know, this guy spent this year doing nothing but shorting NVIDIA. He was shorting NVIDIA stock. He was buying the short NVIDIA ETF. He was buying puts on NVIDIA. He was bearish the market, which is fine. A lot of people were. And the one stock that he really picked to get short in his bearish market view was NVIDIA. NVIDIA was not number two, the number one performing stock last year in the S&P 500. So to have picked that one stock as the one to short, in my view, unless my math is wrong, is a 1 in 500 chance that you're going to pick the one stock that outperformed everything. That's unbelievable. And now this man is getting long NVIDIA, okay? I'm just saying. Now, let's go through why it doesn't necessarily mean it's the end of the world and that the markets are all about the crash. Because first of all, he's buying a call, okay? So obviously all he can do is lose his premium, right? He's not buying triple levered NVIDIA 3-time long ETF or anything like that. He's just buying a call. So even if the stock crashes, he only loses his premium. But and the other point being, of course, that the stock could actually go up and he could lose his premium because he's buying, as I find a lot of amateur option traders do, he's buying, kind of out of the money calls. So if the stock goes up a little bit less than that strike, or even if it goes to the strike, right, you're going to lose all that premium. So the stock could not go down. The guy could still lose 100% of his premium on the trade. These things mean that this doesn't mean that it's like an imminent crash, but I do find it very interesting. And let me give one more caveat to this whole thing. Dan Nathan, and I have made fun of him and pointed out some of his bad trades, but recently he's done pretty well to highs. It's been a great shorty, but put spread on it, which was this call, this TLT put spread. This PFE, he bought very well, pretty close to the lows. I would almost say the low day. He did some kind of call spread or something on that made money, and then he rolled out of that, took his profit, and has bought calls on that now. And I think that these puts on XLP and ITB probably have not been horrible. I don't think they've made money because they probably just lost premium, but he bought the puts. The stock of these ETFs went up a little bit and they've come down now with the market, but it hasn't been horrible. So in fairness, the guy, does have winning trades. Everybody has winning trades. Just like great traders ultimately have losing trades. Shitty traders ultimately have winning trades. So none of this is any kind of guarantee, but I just think that it would be amazing if the guy who was shorting that one stock now buys calls on it, and that ends up being like basically right at the top of the market. It would be like, you could write a book on that, quite frankly, if that ends up happening. It would be unbelievable. Personally, I think. And just to get into that, well, why do you say he's a bad trader? This is like a very sort of well-known thing about someone who might be a bad trader, is that, okay, so now he wants to get long something. He has to get long NVIDIA, the thing that he lost so much money. You're talking about a stock that went up 250% in his face from when he started trading it in like a 6-month period. The number one performing stock in the market, right? So why does he have to pick that one to get long here? He has to make the money back in NVIDIA that he had lost so embarrassingly. Why? You know what I mean? NVIDIA doesn't owe you anything. Make money back somewhere else, for crying out loud. Short soybeans, buy yen. You know what I mean? Who cares where you make the money back? It doesn't have to be in that same instrument. It's psychologically, you're married to it, and that's what screws you up. Get away from that instrument, if anything. To me, that's someone that is making bad trading decisions, and someone who makes bad trading decisions, I believe, has a high probability of losing on trades. So all this is, just like everything else, the probability thing. Like I say, it would be epic if the guy picked essentially the top of it's not the exact top of the stock market, but it's pretty close. It would be epic after shorting this one stock the whole time, then to buy the calls at the top would be epic. Anyway, this combined with real data that I look at, the COT data, is saying that at the very least, you don't really want to be long stocks here. And you don't have to short. I've spoken many times about how I think shorting is just a horrible trade over time. But I think that the risk here seems to be a downside. I don't want to think that because there's a whole bunch of reasons where I don't want to be short. But the data, things like this are starting to tell me that at the very least, not great risk reward to be long here. Does that mean the market can't go up? Of course, it doesn't mean that. The market goes up over time, okay? Which is why shorting is certainly not, you don't have to do that. But if you want to make a trade, not being long is probably good. And look, if we make new highs in the NASDAQ, which is a few percent away, then, hey, you can either get re-long. If it were me and I was short, I would get stopped there. But anyway, wanted to focus this as my don't trade a fade moment for this week as a preview to what will hopefully one day develop into a real podcast, if I can figure out what a real podcast is. And I hope you enjoyed this, and always happy to hear questions and comments. I hope everybody has a profitable week this week, and please check us out at Crowded Market Report. And even if you don't do that, if you like this video, please give us a little, whatever they call there, thumb up or whatever. And we're also on Substack now, which is sort of a little free stuff that we put on there. So if nothing else, join us there. Thank you. We'll talk to you soon.
Subscribe to Crowded Market Report by Jason Shapiro.